Hey traders, this is Blake Morrow with Traders Summit, and I'm super excited to have Tracy from Hilltower Resources Advisors. She's come back to the Traders Summit to hang out with us and talk markets. Good to see you, Tracy.
Great to be back. Thank you as always, Blake.
It is really nice to see you. And I mean, obviously it's been actually a few months, it seems like even longer than that since we've had an opportunity to sit down one-on-one and talk markets. But right now is an interesting market as obviously with the election upcoming and all the events that have been taking place coming up to where we're at today. Volatility is running amok. So I'm going to start off this interview with just a question about how you feel about where equities are at and where the economy is sitting at this point in time.
Well, I think what's really interesting is we are starting to see softening in the labor market. I think if we dig into the BLS numbers, whether you agree with them or not, that's kind of concerning because most of the growth has been in government jobs, not in actual jobs. I posted something this morning, which is 7/30/2024, if you're watching this later, where it shows that business hiring is down almost below pre-pandemic areas. So this is kind of the softening we're seeing in labor markets. As we know, the Fed's dual mandate is employment and inflation. And so I think they're going to take this into account. I think that's why we are seeing right now a big increase in probabilities of a September rate hike. Now, some people think that it may come this week with a July. I'm not really sure about that. I think they'll be a little bit more conservative. So, we'll see what happens in July. I think what Powell is going to talk about at the Q&A afterwards, the presser, is going to be very important if they keep rates steady.
So, Tracy, you talk about them keeping rates steady. I mean, is there a chance? And I know it's maybe an outside chance, but in your view, is there a chance that the Fed might actually move right now? Just it's an election year, and if they feel they're going to cut in September, wouldn't it make sense for them to just cut tomorrow and just say, we're just getting ahead of some of the data that we're seeing that's softening. It's an election season. We just want to get this out of the way so we're not viewed as being quote unquote political in September. Is that even a possibility? And if so, how would the market respond?
Absolutely. I mean, I think that they probably should. My fear is they're always behind the eight ball, so to speak, right? They always wait a little bit too late. And so, yes, we are seeing those inflation numbers come down. As far as the rate of change, inflation is still high. You guys don't come back at me at this. We all know food prices, everything's still up, but they're looking at the rate of change. That's come down quite a bit. We are seeing exactly what they wanted to see, is softening in the labor market. It would make sense for them to cut rates tomorrow. Now, do I think they will do that? I think it's kind of up in the air because what we have seen, if we look at past behavior from the Fed, is once again, they always wait a little bit too late to make a move, whether that's cutting or raising.
Okay. Let me ask you this. You real quick before we get into some of these commodities, because I know a lot of people love to listen to your thoughts, and I do too, especially want to know how you feel about crude and where gold and some of the precious metals are at right now. But the jobs report is coming out on Friday, and we do in our community a little bit of a giveaway for some things. If you guess the NFP right, and you said less than 1,000 jobs will be created this month, and I couldn't tell if it was cheeky, you were joking, or you really feel that way. So how do you feel about this month's jobs data?
I was just kind of being cheeky. I figured, I could win if they come in much lower than anybody else's number that was in the thousands. So kind of just tongue in cheek. And I was just,
Oh, okay. Well, let me ask you
and,
this.
and basically saying I have no idea.
Oh, okay. All right.
I
All
just
right.
think it's gonna be more than this.
So if we actually lose like 1,000 jobs, I'm gonna have you on like literally next week and say, how did you know? How'd you know that happened? All right. Jokes aside, though, let's talk about something serious. Crude oil has really been under pressure, and when it broke 80, it actually caught me off guard. I wasn't watching it the day that it broke 80. And it's like, I watch crude every day, but I think it was happened on a Friday. Wasn't paying attention to it. I might have checked out a little early mentally, but ever since it broke 80, it's been really weak. I mean, where do you think crude's going to go from here?
So, I think we're getting into a little bit oversold territory, but you have to remember at those highs, you have to look at the highs too. Positioning wise, we were well above the norms, well above, we were overly long, in other words. And so, with crude, what we have seen, if you've traded crude as long as I have, I mean, this is what we see in crude. Crude tends to be very volatile. That said, this is why traders like it as well, because it
Yeah.
is very volatile. But that said, we're still in the trading range that I thought that we would be, which would be $70 to $90 for the rest of this year. Nothing's changed in my opinion. I know it's a wide range. Traders love this range. But I think, that's kind of where we're going to stay in. And, if you look at the historical average of crude prices, even if you factor in inflation, we're still well above historical norms. Of course, we've had some spikes here and there, but we're still well above historical norms. That means that E&Ps and these oil companies are still making money. And so, this is kind of why we've seen oil equities, E&Ps in particular, hold up, why we've seen this kind of pull back from that 84 to 74 right now, this recent high low.
So what's going to break us out of this range? I mean, what would, in your view, what would put us in, like, let's say $60 crude prices or lower? What would it be a recession?
It would be, well, everybody's been thinking there's going to be a recession for the last 2 years and
Right.
for oil prices, and we just really haven't seen that yet. And so, I think that recession narrative, I think the media likes to play on that a lot. Also, the narrative that, China's not buying anymore. China's economy is weak. China's economy has been weak for 4 years. I mean, so it's kind of you get to the point where you just can't use that excuse anymore. I think it has a lot more to do with positioning. I think it's a lot more to do with what OPEC says. We have OPEC meeting tomorrow, August 1st. It's a JMMC meeting, which means it's not an actual meeting it's not a decision meeting, it's a recommendation meeting. So I think all eyes are kind of on that meeting tomorrow to see, do they taper off the cuts that they put in place, that they mentioned in the June meeting, that this could be possible. So in the June meeting, they mentioned, that they were going to maybe taper off voluntary cuts, which equates to well over a couple million barrels a day over the next from September heading into 2025. Now, they said that completely depends on price and where the market is at, but the market initially didn't respond that way. And if you look at, right after the June meeting, you had a tank in oil prices as well. And so I think right now everybody's kind of waiting for this meeting kind of to get a little bit of a clue whether or not they are going to move forward with that decision to sort of taper those cuts starting in September.
Okay, so and thank you for the update on yeah, no, I appreciate the update on crude. I do want to ask you a little bit about gold, because gold and we can talk a little bit about silver as well. Both of them have been consolidating not too far off of their high prices. And if you look at it, to me, I'm a little worried about those prices, just because I feel they're so heavy positioned on the long side, whether you're talking retail, speculator, just every market. I don't think there's anybody on the short side of precious metals, but at the same time, they don't look bearish. Do you have any thoughts on where you think gold's going, maybe for the next couple of months?
Well, I think what's really interesting about gold is really retail traders kind of have just gotten on this gold trade. If you're looking at GDX, right? We had, after that breakout that triple top breakout, on the weekly at around 2,100, 2,000. When all the central banks were buying, et cetera, et cetera. We really didn't see inflows in the US in retail trades and GDX, right? We saw outflows that whole time. We've just now been starting to see inflows into GDX, to be honest. This is not the futures market. I'm talking about the ETF market, which is much more liquid, to be honest, than the futures market. And so I think, and I said back then, I said, we're really going to get a push if we start seeing actual retail traders start jumping on this trade. And this is kind of what we're seeing right now. Now, to be honest with you, I expected a much better, bigger pullback than, that $2,300 area than we saw. I thought we would get to, 2,100 or so, but that area held really tight. And we're still seeing a push upward. Now, if we're looking forward, we still have geopolitical issues. We do still have central banks buying, even though we've seen China backing off of that trade. And if we get a rate cut, particularly, that's going to be very bullish for gold as well. And so I think the market's factoring in that as well. So, from here, I think it's obviously not going to be a straight line, but I could definitely see much higher from here. Again, not in a straight line.
All right. Well, I kind of feel the same way. It's like, man, crude is just not backing away, and it does feel like we're going to make at least another leg higher. Last commodity I really want to ask you about is copper. Copper has been destroyed. And I wanted to ask, because those of us that have been, around the markets for a few decades or a couple of decades, I don't want to totally date myself here, but we used to always refer to as Dr. Copper. I mean, as you pointed out, China's been, sluggish for so many years, and copper is finally starting to take note. Ever since the rise of copper following a lot of the EV prices and hype over the course of the last couple of years. But is copper due to fall even further, or can we actually start to see copper prices bottom out at this point?
I think this $4 area is very interesting. It kind of is kind of a support resistance breakout touchback. We've seen a lot of length come out of this contract. I think when we made that push higher to, over $5, I think $5.19, I think that a lot of that was like speculative frenzy that got it there. But over the long term, I am very much a copper bull for a multitude of reasons, and it doesn't just have to do with the EV markets. But I think, there was a combination of reasons for this pullback. I think, again, it was speculative push. I think, I think this has less to do with China slowdown than, say, the EV slowdown. And where we're really starting to see a slowdown in the market, we're seeing a lot of these companies that were really pushing EVs kind of back off. That includes like Nissan, Stellantis, Mercedes, Volkswagen. All of these big, huge multinational car companies have pulled back on their EV goals. So I think that's put a lot of pressure on that market as well, because people are worried about that. On the flip side of that market, or on the flip side of that, we have the AI push. And so all of these data centers are using copper wire because it's conducive. We just saw NVIDIA a couple months ago saying they were going to change all of their cables to copper for short-term usage, meaning between the computers, they're all moving to copper. And so, there is going to be a lot of demand in that area. That said, we've seen a lot, kind of a pullback recently in tech stocks. Maybe AI is not what we thought it was going to be. And then, hence we've seen another pullback kind of in copper. So when you look at the copper market in general, I think you have to look at a lot of areas when you're trying to analyze where this market is. But, I think this $4 area is very interesting. So I think this is definitely an area you should be watching right now and to see, what happens moving forward. But over the long term, I'm still bullish copper.
Yeah, you got to say, well, if I liked it at 450, I definitely like it at 4, right?
Well,
Well,
we haven't been long that, but what's also interesting with copper is, the miners have actually, it's kind of like just kind of like oil equities. The miners have still been holding up really well. If you look at like SCCO, Southern Copper, or Tech Resources, I mean, they have held up extremely well with this, buck pullback in copper. So it's also a very interesting dynamic there.
all right. Well, Tracy, I thank you so much for updating us on that. And I have to say, most I want to say most people know who you are, because I have a feeling a lot of people around know exactly who you are and how to follow you. But I want to also mention something that you've been doing recently, Mic Drop Markets. You have a podcast that you've been doing. Can you tell traders a little bit about that? Because you have a lot of great guests. We're going to start putting some of that content on Trader Summit as well, which we're really excited about. But how do people listen into that, and how frequent is it?
So every Wednesday, I have from 11 a.m. Eastern time to 12 p.m. Eastern time. I do Mic Drop Markets X Spaces, which is then recorded and then downloaded to wherever you get your podcasts. So if you miss it, that's fine. We clean it up, add some music, and it runs a lot smoother than the actual Spaces does. But it's every Wednesday, and we cover topics. I've had you guys on from Forex Analytics a couple times. So, we cover everything from Forex to energy markets, to metals markets, to macro, to commercial real estate, to residential real estate. I mean, I've had experts that I know in pretty much every field. Every week's a different topic, and it's free. It's live on X Spaces. So
yeah, it is. It's an awesome podcast. I enjoyed my time there, and I hope we get to be guests at some other point in the future, and I'm sure we'll be able to get to do that with you. But it's awesome. If you guys haven't followed Tracy there, do it. Tracy, what's your Twitter handle? Best way for traders to follow your work?
I'm at Chigirl, CHIGRL. And then Mic Drop Markets is just at Mic Drop Markets.
All right. Well, thank you, Tracy, for spending your time here on Trader Summit. We do appreciate you. I always enjoy our conversations, and I'm going to look forward to picking up some copper tomorrow. Right now, actually, I'm going to go. So just kidding. All right. Tracy, thank you so much for spending time with us.
Thank you so much. Always a pleasure.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.